time to hit social media for our hashtag segment. For that, we'd like to welcome in Andy Swan, the co-founder of LikeFolio.com, and we have Fast Market contributor Evelyn Baker back with us. We're going to be taking a look at Conagra Foods after their earnings.
Yeah, so they did report earnings this morning before the market opened, and since then their shares are up right now about 5% higher. And I think this really comes off of their incredibly strong revenue growth that they reported, which was 30.3% year over year. Their earnings did beat estimates. The revenue came in slightly below. However, it seems that, people are really buying more of what this brand produces, which is older names like Slim Jim and Reddi-wip, and they also have these new brands like Healthy Choice and Gardein. So Andy, I'm really interested in what LikeFolio has come up with Conagra.
Well, Conagra's putting together a pretty good quarter. They're coming off of what was a disaster last year. I think that, getting over that revenue growth that you're seeing is really kind of fake in a way because they had such a bad quarter last year. But what's happening with Conagra, it really interesting. They acquired Pinnacle Foods, which produces this brand called Gardein, which is essentially a healthy, vegan, vegetarian type of brand. And you can see the ramp up in purchase intent mentions. This is LikeFolio's way of tracking consumer demand for this brand has been really through the roof. I think that the movement of consumers towards veganism, towards vegetarianism, has really produced a big winner in this Gardein brand. And then on the exact opposite side of the coin, you've got Slim Jim, which, that's been around for quite a while, beef jerky company, but we are starting to see a really big uptick in Slim Jim sales and consumer demand for that on the exact opposite side of the coin, and that's because people are going low carb and they need snacks that are low carb, and Slim Jim fits that profile very well. And so they're riding those two waves in a nice way, which is offsetting some of the shortcomings that they've had in their frozen dinner section and things like that.
Yeah, Andy, and you mentioned Gardein and the acquisition of Pinnacle, and I think that's a really good point, is that's kind of largely where that growth came from as well, comparatively. About 35.8% of their increase was driven by that Pinnacle acquisition. Was that more of a defensive acquisition, or was it they saw the growth opportunity, obviously, as sentiment has and trends have shifted towards more healthier, plant-based items as opposed to those legacy frozen foods that you mentioned? Was it more defensive, or was it a growth engine?
Yeah, I think it was a little bit of both. I think that they saw a definite hole in their portfolio and the opportunity that Gardein in particular presented to them as a growth and up-and-coming brand. And so they were able to fill in, what was a very significant hole in their brand portfolio with something that was kind of coming up and out of nowhere in terms of that industry. It's kind of got that tech type of growth in a food product that's pretty rare. It's kind of like a miniature Beyond Meat going on over there. And so they did a nice job with that Pinnacle Foods acquisition last year. I think it's starting to pay dividends. You can see the street liked what they saw in this quarter this morning.
All right, hang with me, guys, because I have two tweets back to back that I want to present that I think really showcases exactly what you're saying, Andy. So our first tweet says, "Don't tell me my Gardein chicken tenders are as unhealthy as your Bok Bok nuggets. I'm here for an ethical time, not a long time." And despite the whatever arguments as far as meat, not meat eating, I like that tweet because it really shows the younger demographic and how this Gardein brand is positioning itself in this sort of no meat movement that we've been seeing in a lot of these bigger retailers. And then my second tweet says, "I love Conagra brands and their amazing portfolio of food products, including beloved classics such as Slim Jim, Reddi-wip, Marie Callender's, and Egg Beaters. And I think it's shameful how little love I see them getting on here." And I love this because it's right back to those sort of classic names that you presented with the Gardein next to the Slim Jim. But I did see Slim Jim in my local Target the other day, and the packaging for some of the products is completely different. You can tell that they're really trying to market to younger consumers.
Yeah, and Andy, a quick question as we tie all of this to the data is obviously Slim Jim and Gardein are going to be opposite ends of the spectrum, but Conagra is going to have hands in both. So, they don't care as long as both of them are doing well, that should bode well for Conagra. But comparing kind of what you guys are seeing, a lot of times you're forward looking as you're analyzing things in real time. I know it's probably a little bit too early to tell, but their forward guidance for fiscal year 2020 is looking for net sales to continue to grow 13.5% to 14%. Obviously, very early on in the data. Are you seeing things that are leading you to believe that might be the case?
Yeah, I think that's very reasonable. I think what we're seeing is that they have placed really good bets on real consumer trends that are accelerating and that are very real. These aren't just flash in the pan fads as much as some people might like to think that they are. The plant-based movement, as well as the lower carbohydrate movement, is picking up steam, and they are well positioned in the grocery store as well as anybody almost, other than probably Beyond Meat, to capitalize on that. And so they're doing a good job spreading it out. I'm not as much of a fan as the last Twitter user might have been in terms of cult status for Conagra Brands, but I do think that they're doing a really nice job.
And then Andy, kind of closing thoughts here. I think Conagra is a really important one to it really matters where you start on your chart. If you went back 3 years, you're going to see a lot different story than if you started in January. And last 12 months, down 15%, but of course up around 40% year to date. Based off of what you heard today from the earnings release and what you guys are seeing in your LikeFolio data, in terms of the next year or so, how do you look at this name given its incredible run it's had so far, even though a lot of that's been clawing its way back?
Yeah, I like to look at this in comparison with others in the space. You can draw a very distinct line between a company like Conagra getting Slim Jim out there and Gardein brands versus a Kraft Heinz type of company, which is way behind the curve. And so I think that there's opportunity there. I think Conagra's I wouldn't say they're ahead of the curve, but they're one of the faster kind of grocery store brands to be catching up to the curve. And so others are falling behind in a big way. And so I like to think of it in that way, in more of a potential pairs trade type of direction.
All righty, Andy, well said. Thanks for joining us this morning. We're going to take a look at that right now, but we'll look forward to talking to you again soon.